Good afternoon to everyone. It's a pleasure for me to be here to speak to you, to be able to present the company and our product to the Gulf region banks and asset manager. I will cover the introduction part, and then I will hand over to Mathieu Müller, who will dig a bit deeper in some of our solutions, especially the risk data. Maybe just a quick introduction about the company, just to let you know from where we come. Initially, the idea was to simplify the life of banker, asset manager, and we wanted to do it in a simple and pragmatic way, and to leverage the technology to do that. At the very beginning, we noticed that there is really good tech developer and there is really good bankers and asset manager. And when a tech developer develop a solution, it's going to be the perfect solution from a tech perspective, but unusable. And if we hear only the specialist, or the banker or the asset manager, we'll have something that has all the functionality, but also almost unusable. So what we did from the very start, from the first day, we gathered together tech people and business people. So since the very beginning, all of our product has been developed based on the last technology, but keeping in mind the need of the banker and the asset manager. Today, we are about 300 people. Most of them, I will say 65% of them are developers, and the remaining are business people, spread in Switzerland and also in Singapore. Of course, our native market was Switzerland and then Europe, and we started our international expansion with Singapore because we had the chance to work with a large bank in Singapore who supported us in order to implement our product in the Asian market, and we now have an office in Singapore. Our idea is to do the same in the Gulf region, in the UAE, in Saudi Arabia, Kuwait, and other countries, in order to be able to make available our product in the Gulf region, which is a very dynamic region in terms of banking, capital market, and asset management. Our focus is mainly private banking and wealth management, and of course, the competencies that we have is all the tools that allow to simplify the life of the bankers and the asset manager from risk perspective, financial product distribution, investment processes. And the idea is to answer to two main questions. It's compliance on one side and rentability and client service on the other side. Regarding our solution, we always had in mind when we started to develop our product to have the whole value chain of a bank, starting from the strategy management, product management, client management, and portfolio management. And for each of these fields, we have tried to build softwares and products that will allow to make the process more efficient and more successful, with always in mind the client needs and how we can answer to those clients' needs. Maybe if you can go to the next slide in order to have an helicopter view on our solution. The idea is really to bring together all the investment service provider, which means to avoid having intermediary as much as possible and putting the bank or the asset manager in the middle of the process without having a ton of intermediary. The idea was to build an ecosystem. Our ecosystem is built with a marketplace, with a product platform, with an investment platform, with various engines, with a wealth platform, and some expert services. And all those tools are fed by different external providers that could be market or reference data, research provider, strategy idea provider, issuer, and core banking system. Really, for us, the idea was really to simplify the flow, to simplify the process, and to make all the services available to the banker and the asset manager in one place, in one solution. I don't want to go deeper in the detail because we have a lot of software, a lot of products, and it's not today's topic to cover all of them. We'll focus mainly on managing risk and other solutions that could help banks, especially private banks, to improve their process. and I will hand over to my colleague, Mathieu Müller, in order to dig deeper into the topic. Thank you.
All right. Thank you very much, Zakaria. And also from my side, a warm welcome and thanks to everybody who takes their time for joining today's call. So when we talk to banks, of course, as Zakaria mentioned, we talk to different banks in different jurisdictions. But what we notice is always a little bit similar. So the banks, they really want to focus on a digital wealth management process, on a good journey for their clients. Because nowadays, with increasing sophistication of end clients, a lot of clients, and especially the younger and up-and-coming generations, they would like to be put in an advisory mandate because they would like to discuss, to have a say in how their money gets allocated. So an advisory mandate, of course, is something that is quite hard to do, that can also be quite expensive to do, which is why the banks need tools to automatize all of this, right? So they need to be more efficient. They need to be able to give the RM or the advisor tools so that he or she is able to really focus on what matters, which is the client. So that's really what we notice. The current process is hard. There is a clear need for solutions. And in the end, this can really be a business case. How? I will show you on the next couple of slides. So what is the real pain point today, right? One big pain point is dashboarding. So all in all, we have four, I would say, bigger pain points. So the first one being dashboarding. So it's really hard for banks without a dashboarding in place to know which clients have certain breaches, let's say risk limits which are exceeded or deviation from the strategies. And then, of course, those breaches, they get not treated for a long time. So it makes the process a little bit complicated, costly, and you need a big support team behind it to manage all of those breaches. The second one is really the entire portfolio construction process. So for an advisory mandate, of course, it's not like a discretionary mandate where you can basically, as a bank, decide what the client will hold, but you always have some client preferences. You may have some regulatory rules and aspects that you also need to follow. You need to follow the client's knowledge and experience, risk appetite, etc. So of course, for an advisor to construct everything manually is also an increasingly hard task, which is why, again, here, it's a big pain point and it leads to a high rejection rate. It leads to inconsistent advice across advisors and teams, which of course poses an operational risk for banks. Then what we also see is the entire documentation and pre-trade checks is a big pain point currently for banks. So of course, before executing a trade, you need to know the impact that this trade will have on the client's portfolio, on his strategy, on his preferences, on the bank restrictions. And of course, as soon as you execute the trade, you also need to give the cost and charges, and you also need to include different kinds of documents. So all of this creates a lot of manual labor, which also is best if you find somehow a way to digitize and streamline this process. The last one is also a big operational risk, which is the manual trade execution. So as soon as the clients accept, if you then need to give this to an assistant or to a trader to execute all the trades by hand, this can also make the process a little bit expensive, a little bit long, and as I was saying, pose some operational risk. So what we see in terms of advisory journey and in terms of opportunities to tackle all those challenges is basically exactly again in those four areas, right? So we think banks, they should have an advisor dashboard in place. This dashboard allows the advisor to prioritize his day, to have next best actions for all the clients which have certain breaches or certain needs for them to be contacted. So it's really here where we can really make the life easier of the advisor to allow him to provide a better quality of advice to her or his end clients. Then the portfolio construction. We have a lot of ways to automatize the portfolio construction process. Of course, it's complicated because you need to respect a lot of different dimensions. As I was mentioning, the client's knowledge and experience, the risk appetite, the bank's strategy, and the bank's investment products, investment recommendations that should be all best reflected in real time in a compliant and suitable proposal for the end client. Of course, the documentation and the pre-trade check is also a point where we feel there is a lot of room for digitalization, where we could help banks so that you can get all the pre-trade checks in places and then also have an automatized document attached to your investment proposal. And then, of course, the trades should be routed through in one go, in one process, so that you have an end-to-end, fully digital and fully compliant investment advisory process. So as Zakaria was also mentioning, the two very sensitive dimensions where we try to help clients is, of course, the bottom line and the compliance. So at the same time, and this is something which is really seldom, we manage to increase bottom line and also to help our clients to reach regulatory compliance. Regulatory compliance, because all different dimensions like documentation, pre-trade checks will all be taken care of. And bottom line, because you can increase revenues by giving your advisors tools that increase the value of their client journey. You can also have more clients taken care of by the same amounts of advisors, because a lot of mundane and a lot of, I would say, labor-intensive tasks can be fully automatized or partially automatized. And then, of course, you can upscale clients because you can justify a higher fees through those very, I would say, new kind of mandates with a better and improved customer journey. On the cost side, you can reduce a lot of highly labor-intense tasks like the monitoring, for example, where you, for example, nowadays need a pool of assistants who do all the checks manually. And now, thanks to tools, you can have everything in one place, which streamlines the process and cuts costs on this end. Then, of course, with the straight-through processing of the ordering, of the documentation of the pre-trade checks, you also gain a lot of efficiencies. Just as a quick example, one of our clients in Asia, they gave us the feedback that after implementing our solution, they were able to basically be 5x more efficient. So with this, I will switch over to a quick demo and give you some look and feels of tools that we provide to our clients for you to get a better understanding on what we do at Evooq. So I will start exactly with one of the pain points I was mentioning, which is the dashboarding. When we started providing advisory solutions to private banks over 8 years ago, it is nowadays, we realized that this was a big pain point. So what we tried to do was to make a very easy and understandable interface for the advisor where he is able to see all of his clients. So this is now a given advisor with the client name, the total amounts of assets of each client booked with the bank, and then he will get different types of checks conducted on a daily basis. So for each and every client, there will be every night a check whether the strategy is given or the client has selected a strategy for all of his or her portfolios, whether the overall client relationship is suitable or not, and of course, whether the client has a risk profile which is still valid. We are also able to manage the recommendation levels. So you as a bank, you would assign different recommendation levels to different kinds of instrument. And whenever you downgrade an instrument from a hold or a buy to a sell, every client which is impacted will automatically be flagged in this advisor dashboard for the advisor to recognize this early and to take the necessary steps to replace this instrument. What we also do is we monitor a lot of different opportunities, because these tools should also increase sales. So we really check whether some clients have a high amount of cash sitting around somewhere, or whether clients have not been contacted for a long time. And with this, in a very easy way, you can set your filters and you can drill down the list by, for example, finding clients which have a certain amount of sell recommendations within their portfolio, for example, or clients which have, for example, health check breaches. And with this, you can narrow down the list, find exactly the right clients to tackle, and from there really go into the client's overview, where you will see different kinds of checks and different kinds of options to monitor and manage this portfolio. So this specific client here is holding different kinds of portfolios, so 2 advisory mandates and 1 discretionary mandate. And you very quickly are able to identify if the overall suitability or overall checks are okay or not. So here we express risk in a very easy to understand measure, which is called a PRG. That's an acronym for portfolio risk grade, which explains you from 1 to 5 how high the current risk of the overall relationship, taking into account all the mandate of this specific client currently is. So you see that the client has selected a risk profile 4 out of 5, which is quite a high risk appetite. And currently he is sitting at the 2 out of 5, which is very low. So the overall suitability is fine. On the advisory mandates, you have a couple of maybe things you could tackle. So you have health check breaches on this portfolio, and you have 4 sell recommendations. So 4 instruments which the bank has basically put on a sell rating. Now let me open up the client's portfolio. This will show a detailed view with a lot of information. A lot of those information we read from third-party solutions. So this application is very easy to implement. We have been implementing this with over 12 different systems, with the large international core banking systems, with proprietary systems, and also with portfolio management systems. We just need basically to know what is in the portfolio, what the client name is, what the performance is, and we will then basically take care of the rest. So we will, for example, manage all the rules. So you see here the client, it's, for example, 2 rules which are currently not respected on cash, or also, for example, on which currencies that the client wants to hold. And then you have some constraints which are currently respected. So this tool does all the checks, all the necessary pre and post-trade monitoring in one specific tool and dashboard. So I have a couple of problems now. So I have rule violations, and I also am holding some instruments which have a red flag, which means that the bank has decided it's better for the client for them to be sold. So what I can do is I can go ahead and select an instrument and manually, for example, simulate what would happen to the portfolio if I get rid of Alphabet. How is this changing my rule, the impact on the rules? How is this changing the impact on the overall risk? So I'm now reducing the risk a little bit. And also, how is this affecting the KPIs of the portfolio? On the KPI part, we really try to explain to the end client what is the quality of the current state of your portfolio. The dimensions, however, they will be defined by each bank. So each bank has different kinds of dimension in mind, what means for them a portfolio of high quality. For some banks, it means that the client holds the right strategy. For some client, it means that, for example, the ESG guidelines are respected of the end client or of the bank, etc., etc. And this tool is really flexible in terms of how it can be parameterized. So I really see for each and every position, what is the volatility per position? What is the risk contribution of each and every position to the overall risk of the client portfolio? So I can really get a very deep understanding and also give the client a deep understanding of where the risks and exposures of his or her portfolio lie. With this breakdown chart, I am able to exactly see how the portfolio is currently exposed, which is the purple bar chart, versus how the portfolio should be exposed, which is the blue diamond, and how the portfolio is exposed after the proposal. So meaning taking into account the simulated trade I was just doing in selling Alphabet here as a simulation. So what I can also do is I can run different stress scenarios, because clients more and more, they want to know, they are scared, they have certain scenarios in mind. Oh, what happens to my portfolio if we have a new outbreak of, for example, COVID? So we could run a stress scenario that is based on the COVID shock in Q1 and give exactly the impact that this would have on the current versus on the proposed portfolio. Of course, we have a very broad library of different scenarios going back over, I would say, 80 to 100 years. And we can also very easily add new custom scenarios. So if a bank has a very specific scenario in mind, our quant team can handle this and we can put this in place. So you can run on a customized way all your scenarios over all the client portfolios. So this is now the manual way to construct and come up with a client proposal, with the advantage that I will get all the checks instantaneously after each simulated transactions. But we can even take it to the next level and use the algorithms to come up with proposals. So instead of me here manually selling Alphabet, I can just go back and say, okay, let me replace Alphabet by clicking the switch button with an instrument that comes from the bank's recommendation list has very similar characteristics like region, currency, sector, but is buy rated. So I'm now pressing this button and I let the algorithm look for a suitable replacement for Alphabet. I have now gotten a proposal where Alphabet will be replaced by Apple. If I want to know why, I can see it here. First of all, it reduces the tracking error, meaning how the portfolio moves in comparison to the portfolio's benchmark or portfolio strategy. So now I've basically reduced the distance from this portfolio to the portfolio's template or strategy from 5.4% to almost 4.9%. If I want to know a little bit more detail on why Apple has been purchased, I can simply do a mouse over, which will give me a rationale coming from the bank's chief investment officer on why Alphabet should be sold and why Apple should be introduced to this portfolio. So this is really now a one-by-one thing. So I could go through all the sell-rated assets and get a recommendation to replace them with buy-rated assets. What is the big advantage and where really the big efficiency gain comes in is with the automated portfolio construction process. So now, if I click this button here, I will get a new proposal that will take care of all the different dimensions that are currently not correct or not good in this portfolio. So it will sell all the sell-rated instrument, replace them by buy-rated instrument. It will take care of all the rules that are currently being violated. And of course, it will take care of the client's knowledge and experience. So we will not purchase something for which the client has no knowledge or no experience. It will also take care of the risk. And now I will see that I have a new proposal. For each and every transaction, we have automatized rationales behind it. So that also the advisor has a high explainability in front of his end client when he comes up with the new proposal, which again leads to a higher rate of acceptance. So I now get an updated portfolio. I can now have a look. I don't have any more instruments in my portfolio which are sell rated. I have no rule violations. So I went really here from checks, so from red, so from flags to all green. I have increased the risk, which is also in line with the client's expectations because he has selected a more risky strategy. And I see that the portfolio quality has also significantly been improved from 56 to 71. On the charting, I will get an updated view on the portfolio. So how am I exposed versus before? So I'm now much better following basically the target allocation. And I can also run the stress scenarios and see what is the impact that this would have, that the different scenarios would have on my portfolio. If I'm happy, I can go ahead and launch the proposal. Of course, for very sophisticated advisors, we also have more functionalities and more analytics. So I can really get a very in-depth look on this portfolio. I can have a breakdown of the yield, duration, Sharpe ratio, and we can very easily also add more analytics because we come from analytics and we have a lot of analytics out our sleeves when it's needed. If I launch the workflow for creating a proposal, I will launch a 4-step process. It starts with basically creating the proposal, meaning giving a name to the proposal. So defining a name like new proposal for March 23. I can also include free text. So this is very important. If I want to have a recap on what has been discussed with my client, I can put this here, your client, I can put in some text. And of course, I can also select the goal. Like, for example, I want to diversify and to improve my risk return profile, for example. Those goals, they can be predefined by the bank so that the advisor just very simply selects the best fitting one. I would also already get the order details, including cost and charges. So I will see how much will each transaction cost, how much is the overall cost, and I can simply also flag by who this trade has been initiated. If the client has a specific trade in mind, you can flag this. What I was talking about in terms of documentation is also addressed here. So here I can see that I can very easily attach all the necessary regulatory documents like the kits, the PRIPs, fact sheets, term sheets. Everything can very easily, with one click of a button, be attached to it. And now as soon as I save it, what will happen is that I will go in a draft mode. So the proposal will be stored as a draft. From there, I can still go back if the client wants to change this or that. I can change it again. I can refresh the proposal. As soon as I say, okay, now the client is okay with it, I basically share it. And as soon as it's shared, it's just waiting for it to be accepted or rejected. If it's accepted, the trades will automatically be sent to the core banking or to the portfolio management system of the bank. And now before I go to this, I will show you the proposal document. So here I can download a modular proposal document. So I can select the language, I can select the types. So I can even change the order of the different paragraphs. So each bank, of course, can modify this proposal in the way they would like. They can define different paragraphs in the way they would like. And if I know my client, I say, okay, he doesn't need a lexicon, he's a finance pro, I simply tick the box that he doesn't want it. And if I know he wants to know the transactions first, maybe let me put the transactions a little bit higher. So from here, what I will get is a proposal document that, of course, will be white labeled and adapted to the bank's needs. So this is basically how it looks as a standard. So this one is really, as you see, an example. For example, it has a macro outlook by the chief investment officer, what will happen on the global markets, what is to be expected, what are the risks, what are the opportunities. Then, of course, we can have a comparison before and after. Okay, we had 4 checks, now everything is green. You see the notes, the meeting notes, the pre-trade costs and charges, the performance of the portfolio year to date, and of course, I will see the updated allocation before and after, as we already have in the tool. It's very easy for us to also add different analytics like ESG ratings. We can also do like some breakdowns on the fixed income side by issuer, by duration, you name it. Then I get the proposed changes. I see which instrument is bought, which one is sold. I always see if it has been recommended by the bank or by the client. And in the end, I get a suitability letter where everything is checked again, risk levels, knowledge and experience, client preferences, and I see that everything is correct. So I can happily give this to the client to sign. Then I get the new updated proposed portfolio, where I exactly see which position is sold, which one has increased, which one has decreased, and which position has newly been added to the client's portfolio. Of course, I was also mentioning the regulatory documents. So they can look like this. This is just an example as a placeholder. So just for you to see that when I get the proposal, I also get all the relevant regulatory documents in one click at my fingertips. So from here, if I say, okay, now instead of modifying it, I want to share it with the client, I can click this button and it will be shared with the client. I can directly share this in the client's e-banking, in the client's portal, and from there, it will simply basically wait on the answer if the client wants to accept or to reject it. Of course, I can also do this the old school way, the old-fashioned way by paper. This is still possible. And as soon as the client accepts it, what will happen is that the trades will be routed through and will be sent to the order management system for execution. Before doing this, I get a final compliance checks, and I also am able to, for example, put in limit orders. If I want, I can say, okay, this is a big position. I want to set it limit for it not to hit and move the market too much, for example. So that's how the workflow works end to end, from identifying which clients to treat, construct something for the client, doing all the necessary pre-trade checks, including giving the right documents to the clients, and then to the ordering. What we now have as a little goodie for you is our campaign management tool. The campaign management tool helps to target the right clients with the right products at the right time. So this is a new module where basically you have different kinds of campaigns that you can see. So now I have, for example, automated campaigns based on breach constraints or based on sell recommendations. So as an advisor, every morning I come into work, I will get all the clients holding breach constraints, and I will get a proposal that has been prepared overnight that de-breaches all of those breaches. And for me, very easy, I can already simulate it on the portfolio, or I can select several clients at once and basically decide to send them all an investment proposal to their e-banking or client portal, because I know that they have a high likelihood of being aware that they have breaches and being happy if I propose them something to de-breach their portfolios. On the bottom, you also see that there are running campaigns that have been defined by the banks. So here we have really a tool where we can have investment stories packaged into interactive campaigns for the end clients. If I want to know more about each campaign, I can open the detailed view. And this detailed view really shows how the chief investment officer or the product team are launching and managing those campaigns. So each campaign contains a story. We always want things to be visual, things to be easy to understand. And the idea here is really to decarbonize portfolios. And this is a specific product that does this, which basically should replace Alphabet, which has been identified by the CIO as a sell-rated instrument. And if I do this on all the clients which are targeted, the total campaign potential is of 300,000 euros. This is just a demo environment. Of course, we have seen this working with large private banks, where you see this run across over 10,000 clients in real time. So it's really like Airbnb. The more criteria I give, of course, the more narrow the campaign potential will be. So I can target client based on where they live, how old they are, what interests do they have, what expected affinity do they have. So affinity is really something we do. We have really increased our team and capabilities around machine learning for the previous 2 years. And this is a recommender system that works very similar to Netflix or Amazon, where clients are clustered and analyzed based on their transactional behavior. And then we try with this to find implicit client preferences or implicit client affinities. So we can really see which client, based on his transaction history, may have a high affinity for this specific product. And we can also target those clients accordingly. With this, of course, we can also analyze how the RMs and advisors are progressing, how many clients have been targeted, how many of those are compliant, and how many of those clients have been submitted a proposal, and of which how many of the clients have accepted the proposal. So it's really also more and more a business intelligence tool that we can provide to our clients to really ensure that the tool is bringing the maximum possible efficiency to our clients. So with this, I would say I close it. It was a lot of information. Of course, it's only a part of what our tool can do, but I hope that we were able to showcase the different pain points that are currently there with banks that we realize, and that we have solutions that tackle those areas and that help in the end to increase revenues, reduce costs, have improved bottom lines, and also with this, take care of regulatory aspects and the regulatory rules. So with this, I would, if it's okay for you, now leave the floor to the audience, open up a Q&A, and and of course also Zakaria, we are very happy to take your questions if there are any. And also, of course, we are always able and very happy to answer you by email or on LinkedIn if you have something that you would like to discuss with us.
Thank you to everyone. Shukran. Ma'as salam.